Right, the Bank of Canada has lowered its key interest rate by 1/4 percentage point to 3%. This was expected. Joining us to talk about all of this is Clinton Wilkins, our mortgage guru. Clinton Wilkins, hello.
Hi, Todd. How are you doing?
Hey, I'm well. What's going on? It's snowy out there.
It certainly is snowy. It's January, but I think the rates are heating up. That's really the news story. The market was about a 95% optimism on a 25% cut of the key overnight rate. It makes it very interesting for consumers now. More and more consumers are taking a variable rate anyway, Todd. I think people are becoming more educated. We've been talking about it for years. There certainly are some pros, but even from a pricing perspective, someone getting a new mortgage today, a variable and a fixed, the pricing's almost the same. And, I think a lot of economists and a lot of consumers have optimism that the rates are going to continue to go down. Yeah, I think they're going to continue to go down this year if inflation is still low. Obviously, we're keeping an eye on GDP here in Canada. Not so hot right now. And we need to spur some spending. The one thing that we're really going to be watching is what happens in the U.S. Obviously, people are tariff crazy now at this point. There were some situations with other countries in the U.S. this week, and we'll see what happens next week and beyond with the U.S. I'm optimistic, though.
Why are you optimistic?
Because the cost of borrowing, I think, for Canadians being lower is great. And inflation has come lower and it's below where the target's going to be. So the Bank of Canada is going to want to spur some spending here. And to do that, we need to make the rates lower. That's one thing. And, I think there's a lot of optimism in the marketplace. The one thing we will be watching is the bond market. And I just need to remind everyone that the fixed rates and the variable rates do not move in concert. So although today a variable rate mortgage is cheaper than it was yesterday, fixed rates have not changed. And if anything, the bond market could go up and the cost of borrowing for a fixed rate could actually increase. So they're not tied one-to-one. That's really something very interesting to remember, especially if you're doing a mortgage transaction. I think there's a lot of confusion and there's so many nuances around mortgage lending. People really don't understand. And that's why I think us coming on here and giving some education is so important. Okay,
so the 1/4 percentage point to 3%. What does that mean to somebody in their mortgage payment, in their monthly mortgage or their bi-monthly payment?
It really depends on what they owe and what their amortization is. It's going to be dollars and cents. We're not talking thousands of dollars here, but I think any little bit helps. So if you had a home equity line of credit, your rate is going to go down right away. If you have a mortgage that has an adjustable payment with a variable, your payment's going to go down. So your amortization will stay in line and your payment will go down. If you have the type of mortgage that your payment doesn't change when the prime rate changes, your amortization will actually get shorter. Now, some lenders will adopt the prime rate right away. Other lenders will wait until the 1st of next month to roll that out for everyone. So depending on how your lender works, you may see an impact, really straight away. Great news. For me, it's the optimism of it all. I think a lot of consumers were sitting on the sidelines, maybe Todd, the last, 18, 24 months because the rates have been high. But rates moving now in this direction, many mortgage rates are all in, that 4.5, under 5% range. We are in a rate environment now that isn't necessarily inflationary, but it's also not going to put any gas on the fire. We're in more of that balanced marketplace, I think, from a rate environment. And I'm optimistic that we're going to start seeing rates in the 3s in the near future. I think that's going to happen.
Like a 5-year fix you're talking?
I think, 5-year fixed. Yeah. I think fixed rates across the board, I think we'll eventually see them in the 3s, depending on what happens with the bond market.
Right.
And to be honest, Todd, we have a couple more cuts here of the Bank of Canada. We'll see variable rates in the 3s.
Yeah.
Obviously, great news for anybody who already has a variable rate mortgage.
Yeah.
But I think for consumers that are looking to do a new transaction, it's definitely worth it to look at a variable rate. The real pros are you can always convert it into a fixed. So let's say the fixed rates continue to go down and you're really a fixed rate person.
Yeah.
You can convert your variable into a fixed rate with no penalty. The other real upside, and I think people forget about this, if you were to break your variable rate mortgage early, you're going to pay a penalty of only 3 months interest to get out. So many Canadians exit their terms early. So certainly a big advantage. My personal mortgage is in a variable, if anybody's curious. I obviously believe in it. And, you need to really understand how it works. there's so many differences between the lenders. You need to really understand the product that you have.
Okay, so is there a psychological barrier that people often have, like kind of like that under 5 is often a barrier, isn't it? That I'm noticing.
Yeah, and before I came on, even a year ago, we were doing a lot of mortgages in the 5 and 6% range.
Yeah.
So we've definitely moved in the right direction, and I do think that we're going to see more borrowers enter the market this spring than we did last spring. I think the challenge in Halifax, we still don't have enough listings.
Yeah.
We're not building enough homes, and not enough homes are going up for sale. I do think that we will see more listings this year, partially because we've had a lot of apartments come online. And I know I always make the joke of the little old lady and the little old man. They're sitting on these prime pieces of real estate that are be great for first-time home buyers, but they didn't have a place to live. But now with more rental units coming online, I think we're going to see more listings coming up in the spring. And typically the spring is one of the busiest real estate markets all year. Right now it's kind of a very interesting time. And, we're actually seeing a lot of purchases happening. Way more than a normal January. I think a little bit of that was fueled by this pent-up demand, people sitting on the fence the last year or so.
Clinton, always great. Appreciate it. And, of course, our next edition of Mortgage 101 goes when? Next month, right?
Yeah, it's just right around the corner, and we're going to be talking about the month of love. February is literally around the corner, and January was Merry Dettmas. Yeah. And, we talked a lot about refinance, and we're certainly talking to a lot of consumers about refinances as well.
Yeah, and if people missed that, they can certainly check it out online.
Yeah, they can check it out on our website at teamclinton.ca/radio. And you can also check it out right on here on the 95.7 News Radio website as well. All our previous shows are on there, and you can certainly listen to Todd and I, and we're also on social media, so you can check us out.
All right, thanks, Clinton.
Thanks for having me, Todd.
All right, great stuff. Clinton Wilkins, our mortgage guru. Thanks for listening, everybody.